Hello and welcome to the Genuine Learning Blog. My name is Melissa Galasso, and today we're going to talk about a newly issued AICPA valuation guide that will be very helpful for both preparers as well as auditors and users of information related to private equity funds. So the valuation of portfolio company investments of venture capital and private equity funds and other investment companies guide was recently issued by the AICPA. I know that is a whopping title, but that is what they decided to call it. So let's talk a little bit about what this is. So again, it is a guide. It is non-authoritative guidance, but it really comes out because of a FASB issued guidance. So back in 2013, ASU 2013-08 was issued, and it provides guidance on if something is an investment company, right? So this is the information that defines what is an investment company, and they give us certain information. So they have required items as well as items that are sort of useful hints as we go through it. And so typically you're going to have multiple investments, multiple investors. They're not related to the parent or investment manager. Typically we're going to see them being managed on a fair value basis, right? So those are some of the key items. And ASU 2013-08 was determined, or it was designed to help us determine if an investment company, if something qualified, and then how would we account for it. Now, the guide that the AICPA issued, so this is not a FASB guide, this is an AICPA guide, was designed to provide information for preparers, auditors, valuation specialists. If they had to do this portfolio company investment, these are typically going to be more complicated in terms of valuation. So it's going to provide accounting and valuation guidance for those items that are going to fall within the scope of Topic 946. So they meet that definition per ASU 2013-08. Now, this was developed by the AICPA's PEVC task force, and that includes members from the PEVC industry, as well as auditors, valuation practitioners, and AICPA staff. So the guidance here is primarily, again, non-authoritative, but it's going to provide accounting information as well as valuation items for those that are in scope. So that's going to include private equity funds, it's going to include venture capital funds, hedge funds, and business development companies. All of those are going to get some more non-authoritative guidance. And why we really like this information here and why they really focused on this was that there's so many different issues: unit of account, transaction costs, calibration, control, marketability, backtesting. These are very difficult in these types of circumstances, and so the AICPA wanted to provide more non-authoritative guidance. And so there are, what I like, 16 case studies, because most people learn best by applying the information. Reading a standard doesn't help us necessarily apply the information, which is why the ASUs have a 55 section, which is implementation guidance. This takes it one step farther. Now, it is still going to be non-authoritative guidance, but if you're in Topic 946, this might be a great place for you to start. They do tell us, and the AICPA believes, that this could be useful for other companies, so venture capital groups, pension funds, and other companies and groups that make investments that are similar in that portfolio. However, it was not designed for that. So again, it wasn't all of the issues that they would have was not contemplated. It was really designed for a particular purpose, and they're just saying, hey, if you are interested, this could apply to you. All right, so that's it for our short and sweet update today. We've had a lot going on. FASB has actually been on a roll with new exposure drafts, so we definitely had been hitting some of those, and so now it was the opportunity to take a look at this guide, and hopefully we'll be able to give you some more information about some of the things coming down the pike. So it was a pleasure having you today on the Genuine Learning Blog, and I hope to see you on a future blog. Have a great day, guys. Bye-bye.